The single most important thing that happened in this epoch was the approval of the spot Bitcoin ETFs. That basically was crossing of the chasm, which said that Bitcoin is not a multi-$100 billion asset class. Bitcoin is a $10 to $100 trillion asset class. So that was a 10x to 100x. And that will ripple to the rest of the world, right? However the US goes, it'll go to Singapore, the UAE, the EU, and there are even signs that it's already rippled into Hong Kong, but it may ripple back into China. And so ultimately, I think 2024 will definitely be viewed as a pivotal year, but I don't see how you can view it as anything other than incredibly auspicious for the adoption of Bitcoin by nation states, large banks, institutional investors.
Though we might not appreciate its full impact for a few more years, the January approval of several spot Bitcoin ETFs by the US Securities and Exchange Commission was truly a historic moment that ushered in a new era for the leading cryptocurrency and the overall digital assets space. According to MicroStrategy founder and executive chairman Michael Saylor, the SEC's green light gave Bitcoin the required ammunition to go from a multi-$100 billion asset to a $10 trillion or even $100 trillion asset. Saylor believes the approvals also caused a major political shift in the United States, especially because the success of the ETFs showed Wall Street how massive of an opportunity the nascent industry presents. We have now gone from an era of uncertainty about Bitcoin's and crypto's future in the United States to an era where the cryptocurrency industry is a major campaign topic. While speaking at the Libertarian National Convention on Saturday, former US President and leading candidate of the Republican Party, Donald Trump, again voiced his support for Bitcoin and crypto and pledged to support the industry's growth in the US if elected as president in November. To a cheering crowd, Trump said, "I will stop Joe Biden's crusade to crush crypto. I will ensure that the future of crypto and the future of Bitcoin will be made in the USA, not driven overseas. I will support the right to self-custody. To the nation's 50 million crypto holders, with your vote, I will keep Elizabeth Warren and her goons away from your Bitcoin, and I will never allow the creation of a central bank digital currency." During a recent interview with Peter McCormick, host of the What Bitcoin Did podcast, Saylor explains that the wind of change is sweeping across Washington, cautioning anti-crypto politicians that they either have to get on board or bear the consequences of fighting an industry that will fight back with everything it has. Saylor adds that with Wall Street and the banks now on board the Bitcoin and crypto train, these politicians will have no choice but to throw in the towel and admit defeat as the entire digital asset space goes mainstream. As we bring you clips from Saylor's interview, please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching and enjoy the video.
The single most important thing that happened in this epoch was the approval of the spot Bitcoin ETFs. That basically was crossing of the chasm, which said that Bitcoin is not a multi-$100 billion asset class. Bitcoin is a $10 to $100 trillion asset class. So that was a 10x to 100x. So we got that from this regime, but I think in the meantime, the SEC has basically been very, very obstructionist, and at war with the entire crypto industry, and we know that, suing all the crypto exchanges, suing a lot of the entrepreneurs. And what we didn't get, we got like a minimalist embracement of Bitcoin. Embracing of Bitcoin by the CEO, very reluctant under protest, embracing. And then there were a couple things that happened that were triggers. The SEC denied and has been stalling the approval of options trading on these spot ETFs. It's slowing them down. So just, those are coming a year or 2 years later than they probably ought to come. If you agree that Bitcoin is a spot asset, why not approve the options for the same spot ETFs? And then the SEC denied in-kind creates. So you couldn't just trade your Bitcoin for the ETF. And so that both of those make these spot ETFs inferior. And then the SEC put forth SAB 121 that made it impossible for a bank to custody Bitcoin. So we got the minimal acceptance of Bitcoin. It's like the minimal thing I can do to legitimize it, But these other logical things, let the banks custody, let people hedge it, and let them trade Bitcoin for securities. These things, which would normally be they're normal and customary in any other asset, they were denied, and so we're going at a very slow rate. Well, I think that created a lot of friction between the Bitcoin community and the SEC, right? Then you have the friction between the crypto community and the SEC, which I don't have to go over it, right? There's 100 stories, man. And that was exacerbated by the fact that over the course of 4 years, the SEC never put forth a digital assets framework, right? So you've got an entire industry, and for it to live, it needs you need a way to establish a digital commodity versus a digital security versus a digital exchange versus a digital currency. And the position of the regulator in this case was, I'm not giving you any framework, and the implication is you guys all have to just roll over and die. So how do you tell 400 million people that support an industry and the entire industry that they all just have to cease operating, right? And so that's a very obstructionist view, like a non-constructive view toward the crypto industry. And then I think the third thing that happened here is we had a lot of banks. There are rumors in the market that there were banks that spent $100 million or more to get ready to do Bitcoin custody. Okay, so you have a bunch of banks spending money, they're ready to do it, and then SAB 121 is just capriciously denying them of the ability to do it without explanation. That brought the SAB 129 debate because, SAB 121 means Wall Street, the banking law, the bankers, the crypto lobby, and the Bitcoin lobby, all four of those constituencies all side together on the same issue. So that being the case, the SAB 121 repeal comes up, and then the position of the administration is we're proactively going to veto it. And now you basically have the administration against Wall Street and crypto and Bitcoin and the banks.
On May 16th, the Senate passed a CRA overturning the SEC's Staff Accounting Bulletin 121, an accounting rule that imposed stiff capital requirements on crypto custodians, making it difficult for banks to provide crypto custody services. Before the House voted to repeal SAB 121, the White House issued a notice threatening to veto the resolution and reinstate the SEC's accounting rule. According to Cody Carbone, the chief policy officer of the Chamber of Digital Commerce, after the resolution was sent to Biden's desk last week, the president had 10 days to do one of three things: veto the decision, sign it to overturn SAB 121, or do nothing by the deadline. If Biden does not do anything by the June 3rd deadline, the bill will be signed into law if Congress is in session, or face a pocket veto due to the president's inaction if Congress is not in session. As the deadline draws closer, the entire cryptocurrency industry awaits Biden's decision. But it's important to recall that the president had promised to veto the resolution to overturn it. In a statement sent out on May 8th, the administration wrote, "The administration strongly opposes passage of HJ Resolution 109, which would disrupt the SEC's work to protect investors in crypto asset markets and to safeguard the broader financial system." HJ Resolution 109 would invalidate SEC's SAB 121, which reflects considered SEC staff views regarding the accounting obligations of certain firms that safeguard crypto assets. By virtue of invoking the Congressional Review Act, it could also inappropriately constrain the SEC's ability to ensure appropriate guardrails and address future issues related to crypto assets, including financial stability. If the president were presented with HJ Resolution 109, he would veto it. Despite this ominous declaration, Saylor believes the resolution will not be vetoed. Here are more clips from his interview with McCormack.
And you have the welling up of frustration over 4 years, which reached a fever pitch. And the combination of that plus the ETH ETF coming up for approval with the expectation that it's going to be denied, punctuated by the lawsuits against Uniswap and MetaMask, which kind of are what caused people to conclude it would be denied. I mean, we all thought it'd be denied 2 weeks ago. Mm-hmm. I thought it would be denied. The entire consensus, even the Ethereans thought it'd be denied. So that brings everything to a head. The bill goes to the House, it passes, then it moves into the Senate and it passes. That's a shocker. And then, of course, Godzilla walks into the room. The Trump card, right, is Trump. And Trump becomes crypto engaged, and Trump comes down in favor of crypto. If you believe in crypto, you better vote for me. And then the next thing you see is the polls flip, and the Republican frontrunner is ahead of the incumbent, right? And when Trump flips Biden in the polls, now you see the entire Democratic Party flip. And so I think in the past few days, this literally happened over the weekend, I think. This weekend, I think you saw the political wind change direction. This became a political issue. The strategists think, wait a minute, 80 million people with a Coinbase account, or 80 million Americans with crypto and a big crypto lobby, and we're going to be on the wrong side of this. There is no one that's going to vote for you because you're anti-crypto or anti-Bitcoin. No, there are no votes. There is an army of people that'll vote against you. So I think the White House changed policies. The Democratic Party changed policies. The signal of that was Chuck Schumer in the Senate voting in favor of the repeal of Sub 121. And you can see why he might. Basically, Wall Street's adopted crypto. Wall Street's adopted Bitcoin. They want to custody it. They want to securitize it. And the crypto industry is just fed up. I mean, they've had enough. And, you know, it's like, I think Sun Tzu says, you've got your enemy cornered, leave them with an escape. Okay, I think that the regulators overplayed their hand in this regard, or a regulator overplayed their hand. If you basically got an industry that represents 80 million Americans and their only option is to fight you or die, it's a battle to the death, right? It's that, you know, that's a very difficult fight. You polarized it. So I think that the dam burst this weekend. Monday morning, the policy of the administration flipped. And now I think they realize that they're best to accommodate, give Wall Street what it wants, give the banks what they want. I think there's a lot of details yet to be figured out, like what will happen next. But all of the signals in the market suggest that the Republicans will be violently pro-crypto, pro-Bitcoin, and the existing administration, the Democrats, will move to accommodate.
Reluctantly pro-Bitcoin.
They will move to accommodate and stop taking such an obstinate position. I think 2 weeks before, the world looked like Bitcoin was going to be the only asset securitized and offered as a spot ETF by the Wall Street establishment, and it was going to spread as the one legitimate crypto asset. I think right now, the best expectation is the crypto asset class will be legitimized, supported by both parties. There's an industry. Crypto is an asset class. There's an entire range of use cases, 24/7 digital trading, digital art, NFTs, tokens, decentralized this, functionality, DeFi. There's a lot of things that will be considered in a more open light, and Bitcoin will be the leader of the crypto asset class.
According to a social media post from senior Bloomberg ETF analyst Eric, a bipartisan group of House lawmakers wrote a letter to SEC Chair Gary Gensler urging the Commission to approve spot Ethereum ETFs and other digital assets because such products offer investors crypto access in a regulated, transparent, and safe format. The letter reads, "The approval of spot Bitcoin exchange-traded products, ETP, represents a pivotal moment for both digital assets and our financial markets. We urge the Commission to maintain a consistent and equitable approach when reviewing upcoming applications for other digital asset-backed ETPs. Specifically, the Commission should apply the same principles set forth in the approval of the spot Bitcoin ETPs as it evaluates the pending Ether ETP applications, as the legal considerations pertinent to Bitcoin also apply to Ether." In his post, Eric points out that the letter states, "other digital assets, not just Ethereum," which means the ETF industry is probably trying to go all in on cryptocurrency ETFs. This ties in neatly with Saylor's prediction that other cryptocurrencies and digital assets will share the spotlight alongside Bitcoin in the mainstream markets. Though a Bitcoin maximalist, Saylor says sharing the spotlight with other cryptocurrencies and digital assets will help strengthen Bitcoin's place in the financial market and greatly benefit the overall digital asset space. Please share your thoughts on Michael Saylor's interview in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.